You need Bitcoin. And I've got one chart showing exactly why you need Bitcoin, especially if you're a millennial. You need Bitcoin or younger. You need Bitcoin. And of course, none of this is financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. It's for informational and entertainment purposes only. Let's get right into it. And the chart that you need to see to show you that you need Bitcoin is right here. This is the U.S. national debt over the last 100 years. This is over on fiscaldata.treasury.gov. It's a little chart that they've got on their webpage here. What is it called? What is the national debt? It's their little page there about understanding the national debt. And if you scroll down a little bit, you get this chart right here. One thing I want to point out very closely here is you see this flat period here after the war. So we had like decently low, like really low debt, and then World War II happened, and we had a little bump up. This bump up looks familiar to the Fed balance sheet in terms of the 2020 increase. Remember how that went? And went way up, and then kind of came down a little bit. Same in 2008, but you can't even see 2008 on this one. In fact, if you tried to point out 2008 on this chart, I bet you couldn't. I'll give you like 3 seconds to think about where you think 2008 is on this chart, and then I'll show you where it really is. Okay, a lot of people probably thought it was right in this little area right here, right? Nope, not true. It's right there. Right there. That's 2008. Doesn't barely registers as anything on this chart. It was already going so parabolic. It doesn't even seem to be much of a blip. It's more of like a tiny little hump in this whole thing. Uh, what is right here? What happened right here? That's 1982. That is the year that the debt began to explode. Now, that was one of the Reagan years. I think it was his second year in his first term. Yeah, it was the second year in his first term for Reagan. Thanks, Reaganomics. Look what you've done. Okay, we're not getting political, but that's who was in office at that time. That's where the debt decided to go absolutely insane. And this is many years after we were off of the gold standard, by the way. Like, it's not because we went off the gold standard here in 1982. We were off the gold standard. So the US stopped using the gold standard in 1973, and then in 1982 is when debt started going parabolic. And then we went up, we were going up consistently, and then right around here, right? It started coming down, right? In 2001. Guess what happened in 2001? Dot-com bubble. Dot-com bubble slapped us super hard. You know what else happened in this period of time here, 2001 and forward, which caused this huge increase in money up until the Great Financial Crisis? That would have been the Iraq War. That also took place there, 9/11, Iraq War, and that took us up, and that started sending us up aggressively again after starting to come back down. And then, of course, 2008, Great Recession. Most of us remember that, and that sent us even higher until, and we weren't even starting to taper off, and then 2020 happened, and it just went straight up from there. And this debt is one of the reasons that we are seeing such a insane debasement of the US dollar. Okay, there's this and the money printing. I mean, the money printing to cover the interest payments and the costs of all these things, of these debts and such, is causing us to heavily debase our currency. And so many fiat currencies are being debased at an increasing rate, and it's getting out of hand. If you're a younger person, things like owning a home went from something that you thought about, and it may have been like a dream when you were significantly younger, but now that you're a young adult or getting into middle age, you're finding that, oh wow, that's never going to happen, not ever. So that's why. Now, if you look at something like Bitcoin, the price of a house in Bitcoin has been dropping consistently for years and years and years, right? 10 years ago, you needed, I don't know how many tens of thousands of Bitcoin to buy a house. Now you need about 10. I mean, you could probably do it with 6 in a lot of states, but 10 will do you. and that'll get you a house. Whereas with dollars, it went from, the average house in the United States in, when was it, 2022 or something? It was $300,000. Now it's well over $400,000, and it's just continuing to go up and up and up and up. So that's why you need Bitcoin. It doesn't need you, you need it. So let's take a look at the chart today for Bitcoin. All right, so Bitcoin, I'm not loving this chart right now, actually. So we've got we got some wicks on top here. I don't love those. This whole formation right here is looking a little bit like a bear flag. I don't like that. It's looking a lot like this formation back here in terms of kind of like going flat a little bit, a little pop up and then drop. That's what I'm looking for now. So I'm starting to look for this as not now. I don't think it's going to be like a huge drop or anything. I think it's going to take us back to probably back to like 54, 55,000, right back to this line here. Yeah, maybe 55.8 to 54,000 in that range. I am looking at this as potentially a rising wedge there. If it breaks to the downside, I would be looking for it to come quickly back to that 55.8, possibly to the lows here at 54.5. I would expect us to get back into this aggressive descending channel that we've been in for a while based off of this, and I think it's going to look similar to this. Like we're going to maybe touch this green line I've got up here, this big green dotted line, this thicker one here. We might touch that. We might tap $60,000 on the way up here in the next couple of days, and then if we lose this trend line here, and I'm going to make this one red. If we lose that trend line, we are likely quickly coming back down to 55.8, maybe even $54,000 range, possibly the bottom of this thing again here. Let me unlock this actually and make this a bit longer now, because it's still going. So let me just drag that out. All right, lock it back down. So we're still in this aggressive downtrend. Honestly, we're not out of the woods yet. We haven't gotten a solid candle. Notice how we haven't gotten a solid candle that is not touching the top of this channel. This candle here for today is still, the wick at the bottom is still touching it. I want to see a candle fully off of this thing and not a hammer like this thing or a red candle like this one back here. Those two were just saying, hey, we're coming back down. I don't want to see any ugliness like that in terms of the candle. I want it to be a solid body blue on my chart candle going up to $60,000 from here that does not touch this descending channel there. I want to see that. Otherwise, I am looking at this to potentially come back down. Now that's the bad news. The good news is if we come up above $60,000 and hold it, we end up making an inverted head and shoulders, something like this. Let me draw it. So we got the shoulder here, head here. If we can come up above $60,000 and kind of trade like this for a couple of days or a couple of weeks, we could see ourselves move back up towards $70,000 again. Because you know how Bitcoin likes to do kind of more flat shoulders and then just take off from there. And this does look like it could potentially do something like that. Now, that is assuming that we don't lose that $55,000 mark. If we lose that, we're going lower back into the resistance back here from February, or sorry, support back here from February, which is between $52,300 and $50,000. That is very possible here, even off of just this little formation that we see right there. And that would play into something of, yeah, it could be like an Elliott wave if you're counting them, 1, 2, 3, 4, and then the fifth most intense impulsive wave down would take us, easily to 50, maybe even to the $40,000 range if this ends up being an Elliott wave that we're looking at right now. And that is Bitcoin for right now. Let's take a look at Ethereum actually, because I mean, let's see what they're doing. What is Ethereum doing? And I want to turn on the SMAs for Ethereum. Ooh, Ethereum's back above the 200-day moving average. I like that. That's cool. I like to see it go right through the 20-day moving average, though. That would make me feel good about this move. If it flags here, I would be worried about it coming back down to the lows at 2,900. But Ethereum's not moving bad. It's not bad. We got our flush down. We're kind of working our way up. We're coming up on resistance at 32.59. And then we got resistance at 35.12 above that. Yeah, no, it's not looking bad. Not looking bad at all. Now let's take a look at the miners. So yesterday, miners didn't do so hot. I mean, CleanSpark was down 0.26%, tapped that $15 range. I did buy a little bit more at that $15 range. Now, I think we might drift a little lower than 15 this time. Notice how it always starts slowing down big time at $15. Someone does not want this thing going below $15. and I think they're diluting. I think it's the dilution, to be honest. It comes up to 18, it gets diluted down towards like maybe 16 dollars or so, and then it drifts further down to about 15, maybe a little lower in a capitulation moment, and then trolls back on up from there. Clean Spark is just being flat and boring right now, as is expected. Mara, let's take a look at Mara. Mara also had a down 0.74% day yesterday. We were down below the 1980 range. I'm still holding on to this one in terms of this was pretty aggressive. I'd like to see Marathon come back up above 1980 and do something. Like, we just need some good news. Honestly, Marathon just needs some good news. It's been pretty quiet lately. They did that Caspa thing where they started mining Caspa, and that was like that got a little bit of a bump, and since then we're just kind of drifting down again. We are still in an uptrend though. You can see here, right? This is generally trending upward in terms of the low, so we're making higher lows, but the higher highs really, I mean, I guess we kind of made a higher high back there, so we are making higher highs and higher lows still on the daily chart. So I'm not too concerned about that necessarily. If we start making lower lows, then I'll start getting concerned about Marathon. I think it's in a holding pattern. It's kind of looking like it's waiting until it's ready to take off. Let's take a look at Riot real quick. What is Riot doing? Riot has been just kind of drifting down. Riot was actually up yesterday, 0.22%, which is nothing. It's not really impressive. Pre-market, actually, everything is up nice right now, so that's going to be pretty interesting. Hopefully, they can hold it through the day. But honestly, what I've noticed lately is with the miners, when they are up in pre-market, they tend to fall pretty dramatically during the day. So I'm not really excited about pre-market moves lately. They have been proving to be something to not be excited about. Riot, same thing. It's just hanging out. Actually, I looked at short interest yesterday, right? Short interest on Riot has been growing. It's kind of interesting. I think they've been making a lot of mistakes lately in terms of, honestly, the Bitfarm saga. They need to honestly get off their high horse on that one and focus on their own business, because Bitfarms is not their business. It's not going to be their business. And yes, they may be a 14.9% stakeholder in the company, which means they have some say in how it is run. The fact that they are getting so aggressive and it's clear that their only goal is a hostile takeover is really putting a bad taste in the mouth of investors. It is making their stock suffer when they should be coming out with good news. Really, all they're doing is making the bad news worse on themselves. So, right, get it together, clean your own house, move your stock up. All right, that's all I got to say about that. Bit Digital is, or was, down 4.56% yesterday. That's to be expected. We lost the 5-day moving average yesterday, but in the pre-market, we are above the 5-day moving average. So we might open up above the 5-day moving average here in just a couple of minutes. That'll be very interesting for Bit Digital. I would like to see it stay above the 20-day moving average, preferably. Anything below that, and I would be looking for it to quickly come back down to the 200-day moving average area on Bit Digital, but I think the 20-day is going to end up being an area of support for Bit Digital on the way up here. Bitfarms has lost the 5 yesterday. Pre-market, it's still under the 5. We're at, let me see, yeah, let me make sure I'm on the right one. Yeah, I'm on the right one. We're at currently, so we closed at 244. We're currently at 251. The price action's great on Bitfarms. It really just needs to flatten out here, chill out from this drawdown here at the 50-day, and then come back up from there, or lose the 50-day, and then which case we're having a bad time. So that's all. Bitfarms is kind of going sideways right now. Let's see if it's going to consolidate and carry on its way back up once more. Let's take a look at IREN. I think IREN did something yesterday. No, it was just down 0.6. Oh no, it was up 0.62%. We're hanging hard. We're hanging on to the 20-day moving average here. Pre-market, we are slightly above it. We did close beneath it yesterday and the day before that, which isn't good news. So we could find ourselves drifting back below it. But basically, we need to conquer the 5-day moving average real fast. Otherwise, we will likely lose the 20-day moving average. And if we lose the 20-day moving average, we are going to come down and test 1126. Okay. If we get a candle, basically what I'm looking for is a candle something like this on the 5-day here on June 21st, where a candle opens away from the, opens below the 20-day moving average, and also closes beneath the 20-day moving average without touching it at all. And that will be something I'm looking for in terms of confirmation that we will likely come back down to 1126, where I will be looking for, again, a candle that closes below 1126, opens and closes below 1126 for a move down to the area of support off of this double top here. Top. 1126 is the midline. If we get that double top, honestly, true support for that is all the way down here, which is going to be about $8 if that happens. Now, I'm not saying it's going to happen. I'm just saying that's what I'm looking for if price gets down into those areas. CORZ. CORZ is kind of just, yeah, we got an ascending channel here. It is hanging on to the 20-day moving average a lot better than IREN, so it could bounce here and move its way up higher. And I think that's because they honestly they have an HPC contract that's been getting them a lot of buzz lately and keeping them afloat. And they have been expanding that further and further, so that's been pretty interesting and great for them. I will be looking for them to either bounce off of this 20-day moving average and take out the high here at 1098, or lose it and come down and test 831 for CORZ. WULF, what's going on with WULF? WULF, we lost the 5-day moving average there. We're going to open beneath it. So if we open and close beneath the 5-day, I think we're going to come to touch the 20-day moving average, which currently is at 459. Same thing with the 20-day moving average. If for any reason we lose it, we are going to likely come down to that like $4 to 383 range on WULF. But WULF has been pretty strong lately. It's been doing a lot of similar like it's been doing a lot of moving up after slight pullbacks. So I'm not like super bearish on WULF right now in that respect, but I am looking for today's candle to open and close beneath the 5-day moving average to get confirmation that we are going to likely at least touch the 20-day moving average on WULF. What's going on with CIFR? CIFR not doing a whole lot. Not doing a whole lot. It's kind of, yeah, honestly, it's just hanging out between the 20 and the 50. It's not doing nothing. All right, not doing nothing. Okay, the Hut. I haven't talked about Hut in a while. Hut had an epic run. I wish I was in it. I missed it. Too bad. So sad. We lost the 5-day moving average. It's opening way below the 5-day moving average. Just turned 630. All right, so yeah, we're way down here. We need to we need to get back to the 5-day moving average and hold above it, get above it and hold above it. Otherwise, we're going to come down to the 20-day moving average at $14.19. But what an what an epic run for Hut. Anyways, that's all I've got for you today. Please like, comment, subscribe, share this video, and have a profitable day.